everyone. My name is Pawan Kumar Sahu. I handle product marketing at Websol. I'll be your moderator for the day. Before we head into webinar, I'd like to give you a small introduction of my company that I represent from. I'll try to keep it short. Websol was part of Wipro back in the days. We were printer manufacturing division in Wipro, and we are specialized in dot matrix printer category. Over the years, the company decided to step out of Wipro and form a separate entity in the name of Web Solutions. Our signature offering, managed print services, was carried over 2 decades. With evolving changing needs and market trends, we decided to bring digital workplace solutions to our portfolio. We expanded our product and service portfolio to cater to mass markets. Over the years, we also collaborated with market giants like Ricoh and Fujifilm. I'd like to highlight a few milestones in our journey that we underwent complete brand transformation, and we are now known as Websol. Let us move to next slide, where we talk about quick company highlights followed by services offering in brief. We have over 20 years of experience, and we have over 500 plus enterprise customers, and we are present in over 2000 plus service locations in overall India. In fact, we also awarded as Best DMS Solution Company of the Year in 2022. You can see some of our trusted clients like Herbalife, JL Morrison, HDFC, Kotak, TCS, etc. FluidWorks is our intelligent workplace solution, which is catering wide range of interdepartmental functions. We have gamut of offerings under FluidWorks, which I will explain in the upcoming slide. Fluid Pro is our managed IT portfolio where we offer infrastructure consulting services, cybersecurity solutions, remote monitoring, and management. Moving on to Fluid Print, we offer print infrastructure solutions according to your custom requirements. We offer both CapEx and OpEx models where we charge print per pay basis, and we are number one in this business in India. Fluid Trail is our process automation solution, which we also offer document management solutions. With this, we can automate all your office processes like employee onboarding, employee records management, candidate onboarding, procurement, legal, everything. We also offer managed GST solution for GST filing, reconciliation, e-way bill, etc. I would like to launch a quick poll, guys, for you. Since most of you are from finance background and audience and accounts background, if you want to know more about floTax, our managed solution for GST, you can click on yes. We will be providing a free demo of our platform. We will exactly tell you how you can automate your processes like e-invoice, e-way bill, reconciliation, e-way bill automation, and GST filing with our platform. My team will contact you and explain exactly how it works and how you can manage your very hectic GST process, very manual process into automated process. Click on yes if you want to know more about GST automation solutions. The poll is on your screen, guys. If you want to know more about our GST automated solution, which is related to e-way bill, e-invoice, reconciliation, bill automation, click on yes, reach out to me so that we will explain you, we will give you a free demo to exactly how to automate your manual GST filing and processes. I'll be closing the poll in another 5 seconds, guys. Thank you, guys. Next, I would like to introduce our speaker of the day, Mr. Akela Prakash Rao, sir. Mr. Akela is an independent indirect tax advocate. He graduated in 1989 from BEATS Pilani in electrical and electronics engineering. He is also a gold medal holder who completed LLB from Andhra University in year 2001, and he has more than 27 years of experience in the field of indirect taxes with exposure in government, consultancy, industries like auto and pharma. It's an absolute pleasure to have you here, sir. I'm sure our audience also looking forward to directly hearing from you. Over to you, sir.
A very good evening to all the participants today for this session. I do not know how many of you are going to be the composition dealers, but definitely this is something that a very important topic under the GST for us to know about, because at some point of a time during our journey that we will be dealing with the composition dealers. So what is that we need to understand about the composition scheme when we are dealing with it? What are the precautions that we need to take? Why at all the composition scheme has come into existence? These are the important things that we will be covering in this particular session. So the agenda will be understanding the composition scheme under the GST. What are the tax implications on the compliance requirements? Comparison of the composition scheme with the regular, and some of the legal aspects and some common mistakes and best practices for the tax professionals, and the FAQs released by the CBSE on the composition scheme, and then the question and answers. That will be the webinar agenda for today. Next slide, please. Yeah, so the composition scheme is a simple and easy scheme under the GST for the taxpayers. Small taxpayers can get rid of the GST formalities and pay GST at a fixed rate of turnover. So, as per Section 10 of the CGST Act, the scheme can be opted by any taxpayer whose turnover is less than 1.5 crores in the previous year. In case of northeastern states and Himachal Pradesh, the limit is now 75 lakhs. As per the CGST Act 2018, a composition dealer can also supply services to an extent of 10% of the turnover or 5 lakhs, whichever is higher. However, for service providers, the limit of 50 lakhs under the special scheme introduced by notification 2 of 19 with a tax rate of 6%. Under the composition scheme GST, aggregate turnover is a crucial factor in determining the eligibility. So Section 2(6) of the CGST Act, aggregate turnover is defined as the total value of all taxable supplies, exempt supplies, exports of goods or services, and interstate supplies of a person having the same PAN, computed on an all India basis, but excluding CGST, SGST, IGST, UTGST, and cess. This is what is the basic things about composition scheme. So let us understand what is a composition scheme. If your turnover is not likely to exceed 1.5 crores in a year, then you can opt for the composition. But composition scheme is predominantly for the traders and the manufacturers. It is not for the service providers. So if you are dealing in goods, composition is good. But if you are dealing predominantly in services, then you need to understand whether you can really go for the composition or not, because somebody who is dealing in goods up to 10% of his turnover or 5 lakhs, whichever is higher, you can render even services also being a composition dealer. But if you are predominantly a service provider, then this particular notification issued in 2019 is going to provide you some kind of a respite that up to 50 lakhs you can be under the composition scheme. But the important factor that you need to keep in mind is the registration under GST is state-wise, but the turnover computation is on pan-India basis. So against one single PAN across all the states in India, if you are having any kind of branches or other outlets, then the turnover, all those registrations will be computed for the turnover calculation, and only if the turnover is within 1.5 crores, then you can opt for composition pan India. It is not just in one state. If you incidentally, if you are operating in only one state, absolutely no problem. But when you are operating in more than one state, all those states turnovers put together should not exceed 1.5 crores outer limit. That is a very important point. One needs to keep it in mind. Predominantly meant for the people who are dealing in goods, but to an extent, services are also permitted. So those things are also very important from this slide that one needs to keep it in mind. Next slide, please. So who can opt for the composition? No interstate sales, which means the business can only sell goods or services within the same state. If a business sells to other states, it cannot opt for the composition. So the composition dealer is supposed to do intrastate sales only, but not interstate sales. So you cannot deal with interstate customers. Intrastate customers only you should have. So no IGST kind of a scenario. No supply of non-GST goods or services, which means some goods or services are outside the GST system, like alcohol for human consumption, petrol, diesel, and aviation fuel. If a business deals in such products, it cannot register under the composition. So this composition scheme is predominantly meant for the GST suppliers. So whichever is a non-GST supply, like alcohol, aviation fuel, petrol, diesel, all these are outside the ambit of GST. Hence, if somebody is dealing in these non-GST products, then he cannot opt for a composition under GST, because this composition scheme is prescribed under the GST provisions. Hence, one needs to deal only in GST products only. So non-GST products are not going to be, and you cannot have a combination of two. Combination of two means you are running a small time hotel wherein that you are going to sell even alcohol also for human consumption. No, it is not going to be permissible. So one should not be a casual taxable person or non-resident taxable person. A casual taxable person is someone who temporarily sets up a business in a state where they don't usually operate. That is a trader selling goods at a festival or an exhibition. Whereas a non-resident taxable person is a business or an individual from outside India who supplies goods or services in India. Since both these types of taxpayers do not have a fixed place of business, they cannot opt for composition scheme. So this is another important point one needs to know, that a non-resident taxable person can be under composition. Similarly, a casual taxable person can't be under composition. One should not be a manufacturer of certain notified goods, including ice cream and other edible oil, tobacco products, pan masala, manufactured tiles, and related products. So there are some notified products. If you are a manufacturer of such notified products and all, then composition scheme doesn't work for you. You cannot go under composition. No person supplying services to an e-commerce operator who is required to collect TCS under the CGST section 52 cannot opt for composition. So if you are an e-commerce player, then even though your turnover is less than 1.5 crores, you cannot go under composition. No manufacturer of such goods or supplier of such services notified by the government on the recommendations of the GST Council. So there are some services and the goods on which that you can't go under composition. So these conditions ensure that only small businesses engaged in simple trade and services can benefit from the lower tax rates and reduced compliance under the composition scheme. So the whole objective of this composition scheme is to encourage the small traders, not to burden with them with the too many compliances, and to give them a simple platform where they can conduct their business. So with these things in mind, they are eliminating a e-commerce player who should be a tech savvy person. Hence, they are eliminating him. Similarly, those who are predominantly into the services exceeding the 50 lakhs turnover limits and all, casual taxable persons, non-resident taxable persons, and certain products and certain services as notified by the GST Council, and non-GST products cannot go under composition, and the composition dealer should not be dealing in the interstate sales. He can do intrastate but not interstate. So these are the fundamentals which one needs to keep it in mind in opting for the composition. Next slide, please. What are the conditions that one needs to keep it in mind? There is no input tax credit that can be claimed by the composition dealer. This is the biggest relief that one can think of. People may question that the entire war in the GST happens on the input tax credit. When the entire input tax credit is going to be denied for a composition dealer, then what remains for him in composition? But the whole issue is that you need not go for the reconciliation, the complex reconciliations, for which certainly you require good tools like what the Epsol is providing. So in the initial talk, Pawan was mentioning about their service offerings, wherein that he was mentioning about the ASP, GSP. Unless you have such packages at your disposal, that the reconciliation of the input tax credit is a Herculean task under the GST. But the composition dealers are spared of such work. So there is no input tax that can be claimed. The dealer cannot supply goods not taxable under the GST, such as alcohol, and the taxpayer has to pay the tax at normal rates for transactions under the reverse charge mechanism. So RCM applies for the composition dealer also, and the tax rate for payment of RCM is the normal only. If a taxable person has different segments of business, such as textiles, electronic accessories, groceries, under the same PAN, they must register all such businesses under this collectively or opt out of the scheme. This is where I told you in the first slide, where the turnover is always calculated on a pan-India basis. Hence, whatever is the business verticals you have, all those put together, the outer limit is going to be 1.5 crores, and all businesses should get registered under the composition only. But if you decide not to go for a composition on pick and choose basis, then it is better that you stay out of composition. Because once you are a composition dealer, your PAN itself is under composition. Though the registrations under GST are taken statewide, but you cannot be a composition dealer in Andhra and be a regular dealer in Maharashtra. Not possible. That's why everywhere under the same PAN, you should be the composition in composition scheme only. The taxpayer has to mention the words composition taxable person on every notice or signboard displayed prominently at their place of business. And he has to mention the words composition taxable person on every bill of supply issued by him. It is not a tax invoice, mind you. What he issues is a bill of supply. The goods held by him as stock should not have been purchased by him from a place outside his state. See, it is not only his supplies which should not be interstate, but even his inputs also cannot be interstate. They should be procured locally only. Where the taxpayer deals with unregistered person, either he must pay the tax nor should not hold the goods. So the composition dealer cannot buy the goods from a unregistered person. So your inputs should suffer the tax, but you cannot avail the credit. So it is a kind of punishment, you may say, but what you are spared after the reconciliations and the big war that is fought for the input tax credit, that is all spared. So what is that you are going to stand benefit, that we will see in the coming slides. Next slide, please. So, yeah, Pawan, I think.
Hello, guys.
Yeah.
I'll be launching a quick poll from the learnings that we have just done. The poll is on your screen, guys. Which of these is not included in aggregate turnover? Taxable supplies, exempt supplies, interstate supplies, CGST, SGST, IGST. Please type your answers in the poll box, guys. Also, if you have any questions or queries, you can type in the chat box, or you have a dedicated Q&A box provided you on the screens. You can click on that and you can type your questions, even if it is related to the topic, today's topic, or else if you have any questions related to GST, you can type in the chat Q&A box. We have a dedicated Q&A session at the end of the webinar. We will be taking up all your questions and queries at the end of the webinar in a Q&A session. You can see good number of correct answers in the poll, guys. Please type your answers.
This is a very interesting question, wherein that Pawan purposefully, I think he has created little controversy, which we will be discussing. So my earnestly request all the participants to actively participate in this poll. We are not going to give you any marks and certificates if you give a wrong answer. More people should join the poll, please.
Yes, guys. The poll will be closing in another 10 seconds. Please type your answers in the poll box, guys.
Yeah. So 20 people out of the 35 participants have participated in this poll. So nobody had selected taxable supplies. Perfectly correct. Exempted supplies, 2 people have selected, but it is included in the aggregate turnover. It's not excluded. Hence, that's the wrong answer. But CGST, SGST, IGST is not computed in the for arriving at the aggregate turnover. But definitely interstate supplies is a worrisome thing because a person who is a compulsion dealer is not supposed to purchase any goods interstate or sell any goods interstate. So the interstate supplies itself is not going to be there in the compulsion dealer's dictionary. Hence, they will not come into the picture. But nevertheless, it is given as one of the options to just test you. But it is a good thing that this particular answer, which created a little controversy, is giving us a clarification once again that a composition dealer is not supposed to have any stocks which has purchased interstate, or he cannot make any supplies interstate. Hence, interstate will not come into the aggregate turnover because composition dealer is not supposed to deal with them. But if he has dealt with them, then he cannot go for the composition. That is a consequence. A good debate is there on that answer, though given wrongly, but yes, it is a good thing that we could discuss it. Yeah, right.
Yes, sir. Over to you, sir. Next slide.
Yeah. So, what are the tax implications and what are the compliance requirements that we have? Let us see. Manufacturers and traders are having 1% rate. It is a big sigh of relief because the composition rate happens to be just 1%. CGST and SGST. There is no IGST. For composition dealers, mind you that there is no IGST. Hence, the CGST is going to be 0.5%, SGST is going to be another 0.5%. All restaurants not serving alcohol. Why alcohol is excluded? Because alcohol is a non-GST item. Hence, the restaurant serving alcohol cannot go under composition because composition dealer is not supposed to deal in the non-GST products. Hence, a person who is a composition dealer has to be dealing with the GST products only. Hence, alcohol being non-GST product, he can't be under composition. Hence, restaurant without serving, not serving alcohol, 2.5 means 5% tax rate. Then other service providers, it is going to be 3 plus 3, 6%. I told you 2 of 19 notification has allowed service providers also to be under the composition with a outer limit of 50 lakhs. So there that he can be a composition dealer. But if somebody who is a manufacturer is rendering incidental services to the extent of less than 10% of his turnover or 5 lakhs, whichever is higher. So in such a cases also, for the service SSE codes, when he is billing, then he should adopt the 3 plus 3, 6% tax rate. So in the composition, you have 1, 5, and 6. These are the only 3 tax rates that are applicable to you. So please keep that in mind that the composition dealer stands to gain in this fashion because he is doing huge sacrifice in the form of not availing input tax credit. So to opt into the scheme, so what are the tax implications? That these are the returns that one needs to be familiar with. GST CMP 01 is the option to enter into the scheme from the erstwhile VAT regime. So it should be prior to the appointed date or within 30 days of the said date. So this is no more in use because what is appointed date for GST? 1st of July 2017. So CMP 01 now nobody can opt for. CMP 02 is intimation of willingness to opt into the scheme for the GST registered normal taxpayers. Those who are foreseeing that their turnover in the coming year is going to be 1.5 crores or less, then if they are interested in going in for the competition, so prior to the commencement of the financial year, means we are already over the due date when we are conducting this particular webinar today on 17th April, because the financial year has already commenced. But if you have not conducted any business in this financial year, but your previous financial year's turnover is less than 1.5 crores, and this year that you want to go for a competition, certainly you can make use of the GST CMP 02, and then you can show intimate your willingness to go for competition. Then CMP 03 is the details of stock and inward supplies from registered and unregistered persons. So within 90 days of exercising this option, that you have to declare it. I told you that normally you are not supposed to deal with unregistered tax persons, but if you are dealing with unregistered tax persons, you should have paid the tax. So all those details will form part of this GST CMP 03, that it is a stock statement. Then CMP 04 is intimation for withdrawal from the scheme. If somebody had decided to opt out of the composition, then he should make use of this form CMP 04. Then CMP 05 is the show cause notice on contravention of the rules or act by the proper officer. So for any contraventions, that is going to be the one which is going to be issued, and 6 is going to be the reply, 7 is going to be the order, 1 is going to be the registration under the composition scheme GST REG 01, and then GST ITC 01 is the details of inputs in stocks and semi-finished and finished goods. 30 days of withdrawing from this option that you have to file this, and then ITC 03 is the intimation of ITC available within 60 days of commencement of the financial year that you have to intimate. These are the forms with which you should be familiar being in composition. Next slide, please. A dealer is required to pay tax on a quarterly statement CMP 08 by 18th of the month after the end of the quarter, and also a return in GSTR 4 has to be filed annually by 30th of April of the next financial year from FY 1920 onwards. GSTR 9A is an annual return to be filed by 31st of December of the next financial year. It was waived off for 1718 and 1920 and a note that a dealer registered under the composition scheme is not required to maintain detailed records. So on these are the returns that one needs to keep it in mind, in addition to what was told in the previous slide. And then on each of his bill of supply of invoices, it should be mentioned that the composition taxable person not eligible to collect the tax on the supplies at the top, and prominently it should be displayed at his business premises that is a composition dealer along with the GST registration number. So GST on supplies made, tax on reverse charge, tax on purchase from an unregistered dealer, all these are to be paid. See, the tax on purchase from an unregistered dealer is only on the specified categories of the goods and services, and as notified class of registered persons with effect from 1st of February 2019, but it is yet to be notified, hence not applicable until then. So unregistered dealer URD purchases, whether to pay tax or not, it has not yet been notified, hence currently that he need not pay. But GST on the supplies made and the tax on the reverse charge has to be paid by him every month. Tax on reverse charge, you know it very well. It has to be paid in cash only, not out of the credit. And GST on supplies made, because the GST rate applicable for the composition dealer happens to be either 1% or 5% or 6%, as the case may be, as we have discussed earlier. And this entire amount has to be paid in cash only, because he is not eligible to avail the input tax credit. Hence, all these are to be paid in cash only. But questions may arise that if I am going to pay the GST on RCM, whether I am not entitled for a credit, the answer is no, that you cannot avail the credit. That has to be kept in mind. Next slide, please. Yeah. So 1, 3, 5, 12, 18, 28 is the regular scheme. But 1 is for manufacturers, 5 is for hoteliers, and 6 for the service providers. These are the only 3 rates under the composition. Regular scheme, dealer has to file many returns. But as you have seen that the composition dealer doesn't have many returns, lesser complaints. ITC is available for the regular scheme. It is not available for the composition dealer. But RCM is applicable for both categories. Non-GST goods, a regular scheme dealer can deal, but a composition dealer cannot deal in them. Services, there is no restriction for supply of services in a regular scheme, but whereas for a composition dealer, it is up to 10% of the turnover or 5 lakhs, whichever is lower. Interstate supplies allowed for a regular scheme, not allowed for the composition scheme. E-commerce transactions are allowed for a regular scheme, not allowed for a composition scheme. Next slide, please. So what are the legal aspects that we have? Section 10 is a composition levy. Rule 3 is intimation for the composition levy. 4 is the effective date for the composition. 5 is the conditions and restrictions for the composition. 6 is the validity of the composition levy. And 7 is the rate of tax for the composition. And there is one important circular, number 77. The procedure for withdrawal from the composition scheme has been detailed in it. And there is a notification 2 of 19, which extends the composition scheme to the service providers also, effective 1st of April 2019. So it is already 6 years old, but that is what is the circular which gives the benefit for the service providers also. These are the legal aspects. So what are the common mistakes? Let us see. So filing of intimation at the beginning of the financial year, opting for the composition levy, if somebody misses, it is going to be suicidal. Prominently displaying at the business premises that it is a composition dealer is a must. Prominently displaying on top of the bill of supply that it is a composition supply and no taxes will be levied is a must. Not availing the ITC either on the purchase or on the payment of the RCM has to be kept in mind. If any of these are missed by mistake, it is going to be suicidal for the composition dealer because his entire composition levy will be under dispute. So these are the common mistakes people do, and the tax professionals have to adopt these best practices by keeping these 4 important parameters in mind while dealing with the composition supply. Next slide, please. Yeah.
Okay, guys, there is a poll running in the LinkedIn. So I have pasted the link in the chat box. You can click on the link and you'll be directed to the poll where the link it is happening in the LinkedIn page. Just click on the link and you'll be directed to the poll. Please answer your views, guys. Just click on the link from the chat box and you'll be directed to the LinkedIn page where the poll is happening. What is the biggest challenge with invoice reconciliation? Missed entries, duplicates, mismatch with GSTR, time-consuming process. Please put your views by answering the poll, guys. Also, if you have any questions or any queries you want to ask directly with the sir or you want to clarify, you can type in a Q&A box that is provided on your screens. Type all your questions in the Q&A box. We'll be taking all your queries at the end of the webinar in a dedicated Q&A session. Most of our webinars, Q&A session is the star, guys, because you will be getting dedicated answers for your questions, anything related to GST. We can see mixed views for your questions in our LinkedIn poll, guys. Please continue. Also on the note, please follow our LinkedIn page for more updates related to GST, industry trends, or anything related to the short content which is related to GST taxation and all the finance and tech related fintech related information, please follow our LinkedIn page, which is WebSol, guys. We'll be posting all the tech updates, GST related updates, newsletters, and more content pieces in the LinkedIn itself. So follow our LinkedIn page on your screens. Over to you, sir.
Yeah. So regarding the RCM applicability to the composition dealers, they are required to pay the tax under the RCM on certain supplies as per section 9394 of the GST Act. Entry 5AA of notification 13 of 17, composition dealers must pay the RCM on renting residential dwellings. So entry 5AB, initially the composition dealers were liable for RCM on renting commercial properties by unregistered persons. However, 55th GST Council meeting recommended exempting the composition dealers from this liability due to compliance concerns. This was confirmed by notification 7 of 2025, effective 16th January 25, which excluded composition dealers from RCM on commercial rentals. RCM relief from 10th of October 2024 to 15th Jan 25, the composition dealers were technically liable for RCM during this period, but were granted retrospective relief, meaning no RCM would be collected. Ongoing RCM liability, composition dealers must still pay RCM on renting commercial dwellings under entry 5AA. So these are some of the clarifications which were issued in relation to the RCM applicability to the composition dealers. So when a residential dwelling is given on rent, now the liability is to be paid under RCM. So whether RCM is payable by such composition dealers, the answer is yes. And how it should be like this. But the 55th GST Council, that they have taken a conscious decision to exempt. Hence, now there is no need for paying the RCM in such cases. Clear? Next slide, please. So switching from composition scheme under the current regime to the normal taxpayer under the GST will attract transition provisions and will be allowed credit of duties held in stocks as inputs or credit of value added tax in respect of inputs and inputs contained in a semi-finished or finished goods on appointed date subject to the following conditions. This is only at the time of 1st of July 2017, but some points are relevant even today also when a regular dealer switches to the composition scheme. So such inputs or goods are to be used in the making taxable supply, not being a composition scheme holder, being eligible to claim credit of taxes. The inputs were not such that the credit was not admissible under the earlier law due to being mentioned in any schedule or otherwise. Being in possession of invoice or a document evidencing payment of duties under the earlier laws with reference to inputs held in stock or semi-finished or finished goods. Such invoices and our documents were issued maximum 12 months before the appointed date, and manner of calculation of amount of credit under GST for a composition scheme will be prescribed. So these are all more relevant during the transition from VAT central excise regimes to the GST. But this particular FAQ may not be relevant for today. But some of the points which are going to be still relevant are that you should be in possession of the invoice or document for evidencing the payment, because when you switch back to from composition to the normal, then at the time for availing the input credit, this document is going to be very important. Next slide, please. I think we have jumped too many. Yeah. When can I opt for the composition levy? Such in order to avail the scheme, you need to file an online application to opt for composition levy with tax authorities. Can opt for this scheme can be categorized as new taxpayer. Any person who becomes liable to register under the GST after the appointed day needs to file his option to pay compensation amount in the application for the new registration in form GST REG 01. Existing taxpayers, any taxpayer who is registered as a normal taxpayer under the GST needs to file an application To opt for the composition levy, inform GST CMP02 at the GST portal prior to the commencement of the financial year, for which the option to pay tax under the aforesaid section is exercised. So these are important that on the cutoff, which is the form that is to be used. Next slide, please. Who are the persons not eligible for the composition? After going through all the slides that you know it, a casual taxable person, a non-residential taxable person, suppliers whose aggregate turnover in the preceding financial year has crossed the 75 lakhs, supplier who has purchased any goods or services from an unregistered supplier unless he has paid GST on such goods or services on reverse charge basis, supplier of services other than restaurant services, persons supplying goods which are not taxable under the GST, persons making interstate outward supplies, suppliers making any supply of goods through electronic commerce operators, manufacturers of the following goods: ice cream and other edible ices, whether or not containing cocoa, pan masala, tobacco manufacture. There is no restriction on procuring the goods from interstate suppliers by persons opting for the composition scheme. Earlier, we were discussing that either on the purchase side or on the sale side, that interstate supplies should not be there, but that restriction has been waived. Now that there is no restriction on procuring the goods from interstate supplies, but you cannot supply the goods interstate, they are to be supplied intrastate only. Next slide, please. So that's all from my end on this composition scheme, which is relatively a very simple one. So there are a couple of questions which are there in the chat box as well as in the Q&A. I am going to take them up, but I request all of you to type your queries in the Q&A box so that I will be able to attend to them. Is e-invoice mandatory? See, currently e-invoice is applicable only for those who are above 5 crores, but certainly this limit is going to be brought down because the composition dealers turnover is going to be at 1.5 crores. So lower e-invoice is not going to be mandatory. Which of these is not included in the aggregate turnover? What must be mentioned on every bill of supply by a composition dealer? These are all the important things Websol has just reminded you once again. So just keep that in mind. And then there are two queries from Santosh. So the first one is, in case composition dealer with 1% tax rate having commercial rent received within the permissible limit, what will be the rate of tax for rent, 1% or 18%? See, a composition dealer is dealing in goods. That is the reason he is under 1% tax scheme. But renting of commercial property is a service. So if he is going to receive the rent below 10% of his turnover or 5 lakhs, because that is the condition, no? That a person predominantly dealing in goods, when he is incidentally rendering any services, the limit for being under the composition is either 10% of his turnover or 5 lakhs, whichever is higher. So in such a scenario, if he is receiving the commercial rent below the 5 lakhs limit only, then he should charge the tax rate at 1% only, not 18%. Because he is a composition dealer, so he can have only three rates: 1% being a goods manufacturer, then 5% if he happens to be a hotelier without alcohol, and 6% when he is a service provider. So in this case, sorry, it is going to be 6% because it is a service which he is providing incidental to he being a goods dealer. So Santosh, the tax rate will be 6% in this case, not 1% or 18%, because it is a service. Hope I have answered you. Then the other question is whether URD RCM is required to be paid, which I have already clarified that one full slide that we have discussed about 2 of 19 also. So you can refer to that. Yeah, any other questions?
There are some questions in the chat box, sir, and also there is a question asked in the by the registrants. while registering.
Yeah, can a dealer paying 5% GST on resident service paying GST under RCM on rent claim ITC on claiming of ITC is ruled out, sir. He cannot claim ITC at all. Composition dealer, forget about ITC. He is paying 5%, let him pay, and he is paying not only rent. If he has sought my views on any particular matter, then being an advocate, when I give him my bill, he has to pay 18% RCM, but he cannot avail credit. That I have clarified it. So, Sumit, no ITC for a composition dealer.
Guys, if you have any other questions or queries, you can type in a chat Q&A box.
Sambit,
And
already I have answered you. E-invoice mandatory for non-GST client. Whether it is a GST client or a non-GST client, e-invoice is only meant under the GST law. Non-GST client, I am not able to understand what you mean to say, that if he is a person who is dealing in non-GST goods, then the GST laws do not apply to him. But if he is supplying to a person who is not registered, then the invoicing is the prerogative of the supplier. So, depending on his eligibility for the e-invoice, he should give. That is the clarification.
so, guys, if you want to directly ask or if you want to talk to the sir, you can raise your hands on your screen so that I will allow you to talk. If you have any questions which can't be typed in the chat box, you can just raise the hands from your charts so that we can enable you to talk directly with the sir.
It's not about the composition, sir. If you have got any questions in the GST, anything that we can discuss, it's an open forum. So you need not have any kind of a hesitations that we need to stick to the topic only today. Because the topic happened to be a very small one. It is just for your understanding that how you should deal with it. Because if you are buying any products from a composition dealer, that he is not going to charge you any GST, hence you cannot take any input credit because there is no GST there on the invoice. But whether the composition dealer has to pay the tax, yes, at the end of the month, the quarter, that he has to sum up all his sales, and then on that, whatever is the tax rate that is applicable, 1%, 5%, 6%, that he has to adopt those tax rates, and he has to discharge his liability all in cash only out of the sale proceeds that he has to pay. Even on the RCM, he is supposed to pay, but he cannot avail the credit. So that is the clarity for him. So somebody had raised their hands. Pawan?
Yes, sir. I'll.
Yeah, please.
Okay, Mr. Chandra Kota. Mr. Chandra, you can unmute yourself and talk.
Hello, are you getting
Yes.
me?
Yes, ma'am.
Yes, yes.
Yeah, thanks a lot, sir. It was really an insightful session.
Thank you.
I have one doubt, sir. In our business, when we have received the advance from our customers, when we are raising the advance invoice, which is definitely not appearing for them in 2B, is there any way we can ask a customer to make the GST payment? Because the liability of making the GST payment lies with us, even though we receive the advance from customer.
Got your point, ma'am. But are you dealing in goods or services?
Actually, service leasing out the property.
So you are leasing out the property, but you have received advance because your advance received for the goods is not taxable currently.
Correct, sir. This is for the because of the lease, it comes under service, no, sir.
So the thing is that you have received this money in advance. Hence, that you are giving him a bill because you are supposed to discharge your tax liability.
Yes, sir.
So the problem will be that you have received the advance, but he is paying only a lump sum advance, but not the GST thereon.
Yes, sir.
So that is what is pinching in your case. But you cannot ask the supplier, the recipient to pay because that the problem at his end, like the way that you are expressing the difficulty, though you have received the advance, but you have not received the GST thereon, you are supposed to pay it from your pocket. Similarly for him, because that he did not receive the completion of services invoice, he will not be in a position to avail the input credit, even if he pays the GST to you. See,
Agreed,
from
sir.
your point, you are right
Hmm.
that the GST has to be paid out of your pocket. But from his point, if you look at it, then the GST ITC rules will say that you should be in possession of an invoice. You should have received the taxable supply.
Correct, sir.
But when he pays you the advance, he is not in receipt of your taxable supply of whatever service that you wanted to render to him at a future date. So he will not be in a position to avail the input tax credit even if he pays you the GST.
Agreed.
So that becomes a problem for him, no?
I do agree, but how to see? The thing is, there is
That
the
see,
outflow
it
of
is a
funds.
win-win situation for both. The thing is that he is paying you an advance in order to secure the service from you.